Hello, everybody. I'm Rob Seaver, Executive Director with Leads Counsel. As you can see, we have a very special guest with us today. I won't take a lot of time introducing this guy, but it is Otto Forrester. He is Senior Vice President of NEA Insurance Group. We're going to get deep inside of the insurance world as it relates to TCPA coverage and all of the other alphabet soup that's out there. Otto, thank you, Mr. Automatic. Forrester, thank you for joining us today. Help me understand a little bit and help our audience understand a little bit who you are and what NEA Insurance Group is and what you do.
Thank you. Being down in Florida here, we got to make sure we stop the spread. So we're trying to stop the spread here.
I am happy that that is what you started with. Thank you.
We're a full service insurance broker. So we represent the insurable interests of our clients. We don't represent one carrier. We're not a captive to one particular company. So we work with multiple companies to adequately protect the assets of the clients that engage with us to mitigate and reduce their risk when it comes to their business. And that could be a hospital group, could be a group of real estate guys that own $100 million worth of, shopping centers, and those guys aren't doing that well right now. But it could be hotel group, it could be assisted living facilities. It's really just depends on the relationship that the broker has with the buyer, CFO, controller, CEO, president, owner, what have you. And then we take that and we bring a package of applications and information and risk and premium spend and their loss control situation, and we sell that to our insurance company partners. And that's our marketing piece of what we do. And we have to do that on an annual basis because these are annual contracts. So we have a whole team of people that sit around and just inside sell our clients to new risk-bearing insurance companies on an annual basis to then get better coverage, reduce spend, whatever it is. And then, the agent or the broker comes in and quarterbacks that process and then brings it to the CFO, owner, what have you, and says, hey, this is what we've done for you this year. This is the best money can buy, coverage, price, what have you. And that's our job as brokers in this space. And then I personally have an interest in the internet world, all things internet, all things digital, and with that comes text messaging and phone calls and cyber liability and data exposure, data breach coverage. And so that's where I've decided to say that's my specialty. I don't want to insure Joe's Plumbing Supply. I think Joe's a nice guy, but his business is not going to be growing like a media company who's selling leads to ADT or AT&T. That guy's growth trend is up right now, and I want to be with those guys.
Well, I've worn my I scare because I care shirt because this is an area, and Otto and I just want to back up a little bit. Otto and I have been on the stage in several cities. We've talked about TCPA insurance, CCPA insurance, cyber insurance. We've talked about all this from the stage, but one thing has been always very clear to the audience and to me. This is a topic that somewhat scares people. And so I want to scare you a little bit because I want you to understand the real potent relevancy of what goes on in insurance, but I also want you to know I care about this, and I know Otto does as well. I've been on the stage way too many times. I've had too many personal conversations with Otto to understand that he's in this to protect you. And I want to make sure that that gets across very clearly today. And so I want to, before we really get into the meat and potatoes of TCPA and all of the other things that I think people signed up for today, help me understand, why would I as a consumer, and I think we need to differentiate that this isn't your auto policy that we're talking about here. Why as a consumer, somebody that runs a company, Leads Counsel, whatever it is, why would I call you versus calling, let's say, and I'm just using a term here, Allstate, to protect my business? What value do I have going through a broker versus going directly? And I'm not trying to get you to cut the direct people out, but I feel there's value by going with somebody that has the ability to pick and choose and put pieces of the pie together.
Yeah, I think it's, Rob, when you buy your house, did you have an attorney represent your interest at closing?
I did not.
Okay, so you went direct. Good for you.
I did. I did.
Okay, so you knew the risks, you understood the risks, you accepted those risks, and then you executed, and life is good. I don't
Well, I think the
have a
difference there
problem
is
with
I
that.
did not know the risk. I
Okay,
think that's what
I
it
have
boils
no
down to.
problem with that. Now, let's go a step further. Let's say you're buying a $50 million hotel in the middle of the desert that has an environmental issue, and the bank is requiring you to uh, personally indemnify the bank against any environmental issue. You gonna buy an insurance policy direct from a carrier, buyer beware, or are you gonna have somebody represent your interest during that transaction?
I get
Question.
it. I get it. So help me also understand, like, I'm not buying an auto insurance policy. And I think that's the differentiation or the distinction that I need to make here with the audience, because it's easy for me to give my VIN number, maybe some personal data about my age, and they can pull my driving record up. And then all of a sudden, within 10 minutes, I've got a quote from Geico or
That's
something
right.
for my annual policy. That's not what we're talking about here. Is that right?
That's right. We are bespoke here. We are custom tailoring a this is not an off-the-shelf product. We are manufacturing this product for you in my office. We have to literally get raw materials, which are the boilerplate policy, rip those apart, add in the special manuscript endorsements that are specific to your business, that better, the language is broader for you, better for you, and watch your dollar at the same time. We got to be watching the mighty dollar all the time. And then once we do that, we take that and we go shop that to 3 or 4 or 5 different risk-bearing insurance companies to get the best. You know, maybe it's a carrier problem. Maybe the carrier's B rated. Maybe they don't have the financial backing that our client's client requires. They might have an A rating requirement for an insurance company. Well, we can't buy from, tiny B rated insurance companies. We need to go find an A rated carrier. So there's lots of reasons why. And then there's the size thing, like, they only allow in the billions, and we're dealing in the millions. Nothing in my business is standard. Nothing in my business is apples to apples. When the client says, hey, just quote me apples to apples, I just say, we're not buying I'm not buying a Coke can where it was manufactured in Atlanta, and then I buy another Coke can that was manufactured by a different guy in Colorado, and we are just fighting on price, because those Coke cans are identical. They're the same thing. Whereas with me, nothing, and I mean nothing, is identical. I mean, to the point where I can get a deal done with carrier A that your broker, or flip that, your broker can get a deal done with carrier A that I could never get done, because they have good relations with them. So that's the whole point. So it's
Got it.
the hypocrisies of our business are endless. They're endless.
I've experienced some of that firsthand. Before we go any further, I want to make sure that if you're watching right now and you have a question, Otto has graciously agreed to answer these questions along the way. We'll try to piece them together. But in your control panel, whether it's on the right, left, top, or bottom of your screen, there should be a control panel. There is a chat and or questions section. I would encourage you to please ask questions along the way. This is a very complicated matter that we're discussing today, and so I'm absolutely happy to kind of pause what we're doing and get your questions out of the way. This is your webinar. Otto, help me understand. I want to get into the acronyms. I want to get into some of the meat and potatoes. What type of customers? We're in lead gen. You know a lot of the risk that the lead gen industry faces as it relates to just general business. Help me understand, what type of customers come to you, and what are out there, and this will help our audience understand like what bucket they may be in as well.
Sure. I find that, we have got, let's just break it down into 3. We've got somebody who just started de novo. They've got one client that they're they broke off from the big mothership and they decided to, hang out a shingle, and they got this relationship, and the guy's like, yes, I will buy, 10,000 leads from you a day for X, and that's de novo, brand new, and guy's off and running. That buyer did not require any insurance. He just said, sign this contract and go with your higher power that you choose, whether you understand the risk in this business or not. I just pushed all that risk to you via contract, and buyer, you better watch out.
So
That guy or gal,
ignorance in that model, right? Like just lack of knowledge, right?
That guy or gal who started that enterprise knows nothing of the risks that they have taken onto their balance sheet. They are unaware. And that's
you don't
okay.
know what you don't know.
That's right. Now that person will call me and say, hey, my attorney, gave me your number and I'd like to talk to you about it. And then we go through the process and we give them terms and conditions and price, and they choose to either take that risk off their balance sheet and put it with a risk-bearing insurance company, or they go, nah, the price is too high, I'm going to stick with what I got. That's option A, or silo A. Silo B is, hey, we've been buying some insurance, and let me give you an example here, Rob. This is one account that I'm working on. This is the stack of policies, okay? The stack of policies.
Oh my God.
And there's about 6 policies in there. And they're buying them through a broker who's representing the insurable interest, and they send me the policies and they say, Otto, somebody, you're smart, you understand my business, can you help me? It's not a premium question. We're not talking about premium, we're talking about adequately protecting the assets of my business. And my broker is a nice guy, but he doesn't understand lead generation for a fee. He doesn't understand that we run a call center with risk of making phone calls on a federal or a state level. He doesn't get it. He or she doesn't get it. Okay, no problem. Let me go through what you buy. Let me find some gaps. Let me show you how we're going to fix those gaps, hopefully save you money, improve coverage. That's option silo B. And then the third silo, and this is in no order of special or good, bad, or indifferent. Third silo is, we've grown our business to 20 million in revenue. We're naked from insurance. We've paid 6 or 7, significant claims in federal or state court, and I just discovered that you can insure this risk. I'd like to talk to you. Now that patient they have the flu. They are sick, and we need to nurse that thing back from the dead and get it to be an insurable account, because the first thing they're going to say, the insurance company, is they have no coverage, we have no loss history, I don't know what they paid out, give me a detailed. So that's what I'm really good at. I've done that very well. Clients who have been bare in insurance for 5 years, they've grown to 20 million in revenue, they paid out 350,000 in losses, self-insured losses, and now they just discover that we don't have to bear this risk. We can push this risk off our balance sheet to a risk-bearing insurance company. And those buyers are great because they love thinking about the law and getting very technical, and I'll get as technical as they want. I'll explain it all, and then they either buy or don't buy. And I've worked with publicly traded companies. I've quoted billion-dollar companies. I work with guys that just started, yesterday in their garage. So you'll never outgrow us. We understand your business. You don't have to waste 5 hours of your time trying to explain an affiliate marketing campaign to your brother-in-law who sells home and auto insurance. I already know all that. I already know all of that. I already know the pitfalls and the risks and all of that. So all I'm focused on is helping you grow your business while reducing your risk, and that's my job.
Well, I want this to be somewhat of a story arc where we set the stage, we talk about what the risk is, and then what we want to ultimately do is help the attendees understand what they could do with that risk. And so I'm going to start off with the complexity side of it, the thing that really actually, when I went out and I did a little research, and although we've done this from the stage many, many times, I have always felt like I'm just throwing you questions that I really don't even know what I'm asking, and even subsequently don't know what I'm hearing back in return, because I don't own a lead gen company, so I don't understand the risk. But I did write some things down, because I remember for Leads Counsel, we purchased some insurance through you, and I remember that journey of trying to understand it. And you helped me immensely understand what we were looking at, where our risks were, and what we were trying to do. But I want to make sure that when we're talking about acronyms, or we're talking about terms, that we break some of them down early on and help the audience understand. We have a commercial general liability, or CGL. We have a directors and officers, D&O. We have a professional liability, or errors and omissions, E&O. There's damages. I mean, in general, there's a lot of nuance to this policy versus this policy. And the research that I found, which is once again why I wear this stained shirt, is that, oh my gosh, each court sees some of this a little differently. Each insurance company sees this a little differently. Each vendor and customer sees this a little differently. We know that. Help me break that down. For a commercial general liability policy, generally, what is that for? What is that covered typically? And why would you help somebody write that policy?
Well, again, the concept of a CGL policy is to pay to indemnify and defend you for your negligence for bodily injury and property damage. Period.
Okay.
So tell me how a TCPA claim, or a data breach claim, or a cyber liability claim triggers bodily injury, where I literally get hurt, my corpus is injured, or two, my building is physically damaged, the roof ripped off, they crashed into the side of the building. It doesn't exist.
Yeah, but yet when we polled people from the audience in a lot of our in-person events, one of the things that we clearly heard was the lack of understanding that I may be covered for TCPA, Telephone Consumer Protection Act, under my general liability policy.
Used to be able to, Rob. That was you could get that prior to 2004. There was no exclusion in the CGL policy prior to 2004. So where
then
there
let's
was
move
no
on
language
to the fact I'm a decision maker in the organization, right?
Yep.
Director. I make a decision to put this out there. I run this ad, I collect data, I make phone calls and everything. It's kind of under my control.
Yeah.
Then we get sued, right? Is that where we're looking at? Directors and omissions, or what? Yeah, directors and officers.
Yeah. Well, they're now I'm going to get. I don't want to go too far down the rabbit hole here, but the D&O piece, there's teeth in that TCPA law that can hold personally liable the directors and officers of the corporation. So there are policies riddled with exclusions there. Now there's carve outs. There's something called Side A coverage, which I'm a big fan of, and then there's another product called the Side A DIC policy, which is a difference in conditions. Yeah, I can't even. Yeah, no, we're done. Boom. All right. So the point is the risk exists. We, as your broker, can take that risk off your plate. And the good news is the insurance companies that we're talking to may or may not even know how to spell TCPA. And so that's how we, as your broker, are getting an opportunity to get some coverage. I don't know how this thing is coming in, Rob. We're using a very esoteric example, but I've had the ability to I'm not saying I pull a fast one on the carrier. That's not what I'm saying. What I'm saying is we fit a square peg in a round hole, and the carrier is on something that they may or may not understand what they're on, but that's their business. That's not my business. I work for you, the client.
So then we have, I don't know if it's the final one, but the last one that I had mentioned was the errors and omissions policy as well. Is that separate to the other two?
Yes, and that's where I'm going to spend most of my time getting, again, for this conversation, the TCPA piece. We're gonna build a lot of language into that E&O or professional. That's a interchangeable term. We're gonna build a big wall there of limit of coverage in your E&O policy. That's where we're going to find the majority of the language that we need to adequately protect the assets of your company. Now,
Go ahead. Sorry.
if again, to understand the definition of an E&O policy, that means you're providing a service for somebody else. So using that example, if you are vertically integrated where you generate the lead, you make the phone call, you sell the insurance, you sell the financial product, you sell the Bible to the Mormons in Utah, I don't know, whatever you are cooking up here, okay? If you do all of those things, a professional liability policy is not going to work for you because you can't operate on yourself, you can't sue yourself. So where the professional liability comes in is when you are a little piece of the layer tree where you have the large brand, I'm not going to say names, let's say a large telephone comms company or an alarm company wants leads, they are obsessed with leads, an insurance company, they funnel that down to a giant broker who then funnels that down to somebody to generate the lead, and then they sell that lead to somebody who makes the phone call. And I typically play in this world here. This is where I play. Now, this guy up here, he may or may not have TCPA coverage, may or may not. That's his problem. But he's pushing all that risk down the funnel as much as he can. And now what's happening is all these guys down here, you know, frankly, the people that hang out in leads council, those guys are saying, oh, wow, look at all this risk we have here. Let's figure out how to reduce that risk, put it with a risk-bearing insurance company, or we call an $1,800 an hour attorney, and he's going to mitigate it for us. Okay, great. That's awesome. Do that. But where's the gunpowder when the suit comes in? You still need capital in the form of a defense to pay the defense costs. And that's another piece that I don't think a lot of people really think about. They think, oh, we'll never get sued. Okay, fine.
It's
Never
just
get
damages
sued.
that they worry about, and
Right.
not even that, right?
Right. So that's there's a lot there, but
So I went back, like I said, I researched a little bit on this, and there's not a whole lot about this, because one of the questions that we heard a lot from the stage was, one, is there coverage? Because I think some people don't even realize that there's coverage. But then there's like, oh, am I covered through my general policy or whatever? You've talked about exclusions, which really scare me, because I think those exclusions probably can be buried a bit deep inside of these policies. And
you mean
so
somewhere
therefore,
in here, Rob? Somewhere in here? Yeah.
right there.
Absolutely. Right here on page 427, right here.
I caught that by accident. You know, I don't think that's, you know, I don't think that that's common that somebody would catch that exclusion. Didn't you say that there was an actual letter or actual common area that exclusion is always located?
Exclusion Q and exclusion P. Just open up your CGL policy, go to exclusion Q in the bodily injury property damage. It says TCPA excluded. And then in the personal advertising injury section, that's the part 2 of your CGL. It's exclusion P, as in papa. Yep, it's right there, clear as day.
Papa. Well, I will tell you that I think that you have people pausing their webinar right now, pulling out their policy or calling somebody saying, get my policy so that I can find this. But that exclusion, as I would understand the word exclusion, means that if that is included in your policy, that means you are not going to be covered in case of specifically a TCPA lawsuit. By insurance, you're not going to be covered. Is that correct?
You know, my professional opinion is if a carrier says you're excluded, you're excluded. I don't know what to tell you on that one, Rob.
I'm glad I brought an expert to this.
Yeah.
Let me see. Do insurance companies generally want to see an insurer's TCPA compliance policies? How do TCPA compliance policies and procedures play into the insurance conversation? I just want to pull that up because I do understand that you talked to me early on about this, and you sat down actually with a large carrier at one point to try to understand what their depth of knowledge. Help me understand. I'm going to back up a second because I think it's relevant to this conversation. If I were to have a fire in my business and I had a catastrophic loss, how does the insurance company treat that coverage versus this TCPA thing?
Great question, Rob. You know, we have data as insurance, risk-bearing insurance companies. We have data going back 200 years on fire, you know, claims in your zip code, in your state, in your county, going back from the beginning of time. And we've been able to statistically say, okay, for every house, for every 1,000 policy holders we have, we're going to have 30 fires a year, and we need to adjust our price by X to make sure we make our margin to satisfy our shareholders, yada, yada, yada. Do you think in your right mind that insurance companies understand cyber liability or cyber breach coverage or security social engineering coverage? These coverages were invented 5 years ago. They have no claims data on this. And if they do, it's very minimal, and they're guessing. They're all guessing. And so the industry has built these policies for cyber specifically, CCPA, GDPR, those two big alphabet soup right there. They're throwing endorsements together and saying, yep, you've got GDPR coverage to include CCPA coverage. The law was just written yesterday.
18 octaves higher, yes.
Right. So, okay, they're including it. How do we know it's good or not? Okay, we're gonna go with it. I mean, it's, you know, so that's where I come in and I say, okay, guys, what are you guys really worried about here? You know, okay, yeah, we got GDPR here. That's great. You know, that's important. Let's focus on that. But what are we really concerned with regards to what you do in your business every day? And they go, okay, let's talk about that. I aggregate person identifiable data in the cloud with Azure, with Amazon Cloud, with whoever, and read that contract. They're pushing all that liability down to you if there's a breach. We don't keep social security numbers. We just, you know, we just do this. We only keep copies of x-rays. We've engaged with an oncology group to keep the screens, but it's all in and I'm gonna mess that one up. Anonymized. Don't record that.
I'm not gonna try. It's recorded, by the way.
And I'm not even gonna try. Everything in there has no connection. I had one guy who said, yeah, everything's anonymous. Everything's anonymous. And then he came in the back end and said, based on the area, geographical area, their internet address, the like 2-3 things, they're able to, with the data they have, to like circle it down to like, I'd say I'd be able to pick you're one of 5 people just based on anonymous data. I was like, that's scary. So the world is changing, my friend. Well, and the laws are changing too. So you can choose to keep on staff attorney counsel to stay up on every single change locally, federally, keep you up, make sure your compliance is up to snuff, and pay an inordinate sum for that, or just put that risk with the risk-bearing insurance company and let them figure it out.
It's interesting you say that, because we're talking about a federal law, a federal regulation, but is interpreted very differently within the states and the different districts that are out there, depending on where this case is going to be held. And so as I went out and I researched some of this, it was interesting because although you said, hey, look, we're probably going to dig deep into the errors and omissions, the question was that, like, does this fall under, and I have to read some of this because I just jotted some of this down, does this fall under a general advertising injury claim, or is there something more ominous or something more threatening or risky to the lead generator out there? And so far, does the advertising and injury component of the CGL, you're saying that's not where most courts have seen this. Maybe some have. Help me break that down a little bit,
Yeah,
because
sure. I mean, that's actually a good and bad thing, because prior to 2007, Rob, that exclusion Q and exclusion P did not exist. So attorneys, counsel for these clients were tagging the insurance companies with TCPA on the personal advertising injury coverage. So now they paid a couple claims. Now the industry from a compliance standpoint is, yeah, we're covered, we're good. We've already paid that claim, we're fine. The insurance companies manufactured the form with the exclusion now. So where the counsel said, your leads counsel, when in-house attorney says, hey, we had that claim covered 3 years ago, we're good, we don't need to worry about it. The policy has now been renewed for 3 years, and the form in the policy changed, ergo new exclusion for TCPA, and they think it's still there because they did pay a claim in 2005. But they haven't read this lately, Rob. They haven't flipped through this to see what's covered and what's not covered. That's my job.
We started off by saying this isn't an insurance policy for autos or automobiles that we're so used to as consumers. But at the same point, when we look at the premiums that are assigned to a lot of these policies, they're all over the place, much like an auto policy may be for my 16-year-old son who's just jumping in behind the wheel of a car for the first time versus, a 35-year-old person who has had a clean driving record. Is this very similar or parallel to what we see with these types of coverages?
Absolutely. And I would say partly what my clients appreciate with me is we're always looking for the new. So I'll give you an example. We have maybe 5 risk-bearing insurance companies, all A-rated, billion-dollar companies. They're actively underwriting TCPA right now, okay? Or cyber, or D&O, whatever it is, okay? Hey, hey Otto, we just put together a syndicate in London with 500 million in capital. We're underwriting internet companies, and we'd like to talk to you about your book of business. Okay, great, guys. What do you want to talk about? Yeah, we've got to deploy this capital. We're ready to go. We want to take some risk. What can you do for us? Oh, interesting. I have some very important language I need in this policy before we can even have this conversation. Cheerio, because they all speak in London talk. Okay, Otto, send it over. Okay, just approved by legal. Let's go. Flood the carrier with applications. Flood them with applications. Boom, aggregate is now lit. They have their 500 million in capacity. That window is now closed, over and done with. And those guys, those cheeky fellows, are going to stare at that 500 million for the next 6, 8, 10 months, see how it develops over time. Maybe trim the risk a little bit, maybe dial the risk up a little bit. We don't know. But that's how a marketplace in our business works. New carrier comes to the table, price, terms and conditions change, boom, a lot of capacity goes in there. Then my good buddy, who takes me out to dinner every 6 months, he's like, dude, what happened, man? Like, what happened to all the business? Your price is off, pal. You got to get a better price, and your language is off too. It's wrong. We got to move some commas. We got to get something moving here, man. Clients are not okay with how you're writing your policies. So that's how a marketplace changes, and that will never go on CNBC, because the commodity of the insurance is too complicated. It's too complex. The scenarios and the levers are way too much. I got a business that does 2 million in revenue. They've never had a claim. I've got a business that does 50 million in revenue. They've got tons of claims. Got somebody who's super compliant. All they do is talk about compliance. I got somebody who just is like rocket the risk train. They don't care about risk at all. They're totally pedal to the metal. So every account is so different, Rob. You just never know. And that's why the broker like levels all that out, even keel. just deliver results every
I'm
year
glad
for
that
their
you,
clients.
I'm glad you kind of tied that back together to the fact that like you've made it very clear that there's not a lot of history as it relates to these types of coverages, specifically TCPA, CCPA, all the things, FCRA, whatever the alphabet soup is that you have. But choosing a broker that can actually talk the talk to the insurance company is important, because one of the questions that that came up just now is, do these insurance companies care at the level, and I maybe this is different for each company to each company based on what their exposure or experience is with these types of coverages, but like, so for example, Active Prospect, Jornaya, those types of technologies that help validate that the transaction was compliant. Do these companies have enough sophistication and or experience or knowledge of the industry to actually appreciate the fact that as me as a lead generator that I'm employing these techniques or these technologies, or even as the broker who understands it, say you, goes to the insurance company and says, well, this company is doing this, and this is their TCPA policy, and this is how they're protecting consumers, and this is the lower risk because they have this. Does that even fly, or does it matter to these companies?
The underwriting process is about a 6-page E&O application and then a 2-page TCPA app. And on the 2-page TCPA application, they ask about who the who the counsel is. They want to know what kind of dialer you're using. They want to know, are you sending text messages? They just want to know some very 10,000 feet type of situation. Now, where that comes in, what you're talking about is if we have to resuscitate somebody from hey, we've gotten declined everywhere. Nobody wants to, this is a turd account. Sorry, it is not good. It's a dog with fleas. We need to resuscitate this thing. So, okay, all right, let's engage, those, I'm not endorsing anybody specifically, but let's just say, and they're all great. And anything you can do to reduce your compliance risk is a wonderful tool. And there's a ton of great people in the industry. And I think that's something that leads counsel is doing, is they understand that this is this golden goose that continues to lay these golden eggs, and we cannot ruin this industry because, if the litigation and the laws change, we're toast. We've ruined our industry. And so that's the great things for the names that you're talking about that are trying to create some structure in this very unstructured world to provide some compliance. And my point in that scenario is, okay, I'm going to take that compliance policy, I'm going to run it up the chain to the insurance company that's going to take a big entrepreneurial risk on this account and say, hey guys, I know that they've done X, Y, and Z, they're compliant, we can get you on the phone directly with the horse, let's work through this problem and get going. That's how we're going to use a tool like that. If you're just starting, de novo today, and you call me and say, hey, I'm with Jornaya, I'm with Active Prospect, we're compliant, versus de novo without that, I mean, this is not progressive.com. You're not going to get a 22% discount with that. It really just depends on the underwriter's take on your risk profile. If you're running offers in mortgages, that might, in today's world, and you're sending text messages, that might be an issue for that particular underwriter versus not sending text messages and selling Medicare set-asides or selling leads for alarm companies. So it's just like, that's why I keep saying no account is the same. Every account is so different.
If I'm understanding you though, one, it's the broker once again becomes a major player in helping the underwriter understand their risk. But to the original question, do most of these companies understand it at a level where they recognize those types of tech stack solutions in mitigating their risk and covering you? Is it that sophisticated, or is it still much of like other factors as well?
I wish they understood that mitigation better. I think over time, the more I, as a beacon in the industry, continue to tell them, hey guys, this one's different. Look at it this way. Look at how much compliance they're spending on, you know, X, Y, and Z, and look at all these programs and look at how they dot their I's and cross their T's from a risk management standpoint. But again, Rob, I think it's important to understand, if your premium spend is $500,000 and you're buying a $10 million limit, that matters. If your premium spend is $25,000 and you're buying $1 million limit, you know, the carrier's not going to be as up in your business as they would otherwise, you know.
So
and
their
you're
risk
smaller.
is directly proportionate to how much they want to dig into this. It
That's
sounds as if, right?
Yeah.
We talked about a lot of things. We talked about like the breakdown of what the industry jargon is. We've broken down the different policies. We've talked about why it's important for a broker versus going direct. And in some cases, do you still find that a lot of these companies will still take these policies on direct, or do they encourage you to go through somebody a little bit more educated about what's going on, or will they write the policy, throw the exclusion in, and hope that the company never asks about the specifics on what's really covered? I mean, I just want to make sure that people understand there is a difference in trying to go direct with your insurance coverages versus trying to find somebody who understands the industry, understands what we've seen historically in a short amount of time, what the pitfalls and dangers of not having the right policy in place are. Where do these insurance and these underwriters, where do they feel like, would they rather work with you, or would they rather the company go direct?
Well, I think that, you know, number one, the majority of well, all of the companies I do business with the exception of Progressive, by the way, I'm a licensed agent with Progressive, but they go direct, but nobody else skips me. They need me in the distribution process. Now, conversely, to argue in favor of the independent agent distribution system, the whole point of me is I understand your business, I understand you, you know, I talk with Betty in the office. You know, I support your, you know, your nonprofit charity. I'm there for you. I've known you for 15 years, and we've switched you from, you know, 3 different insurance companies over 15 years, and yet you didn't have to tell a new story to anybody because I already know the story, and I do that for you. So when you go direct, and then that carrier sends you a non-renewal or they jack your price by 200%. You have to go find somebody new, explain the story, and then hope, pray that they'll do it for the price that you paid last year. And you only have like 1 shot or 2 shots there. Whereas me, I've got a Rolodex of 20 carriers that'll look at that, and you are not doing anything. I'm doing all that for you. I represent you.
I guess where the rubber meets the road on this is that ultimately these are insurance policies that you never ever realize the value until it's either too late or it did its job, right? I mean, much like a backup to your computer, backups are really only there for restoration of the data. They're not really there to back it up.
Yeah,
and you only find out did it work or not work when you had a catastrophic loss. Is that
it's like an ounce of cure is worth, or an ounce of prevention is worth a pound of cure. Thank you, Rob. So I mean, you know, to use that example, it's like I have guys all the time. They're like, "Oh, Otto, that's so expensive. That's crazy." Okay, fine. It's $100 grand for a $1 million limit or a $2 million limit, whatever it is. Let's say it's a $3 mil limit for $150,000. That's crazy, Otto. You're insane. Those underwriters are ripping me off. No way I'm taking that. Okay, fine. 6 months later, a little envelope from Dewey, Cheatham and Howe arrives on your doorstep, and you are now in federal court, and you are facing, you know, a mass tort class action where your legal bills now could range $700 to $1 million. Well, now how does 150,000 sound with a stack of attorneys waiting to take care of this? All you have to do is just forward the letter to them and they run with it. Or now you have this giant problem and a huge distraction and a big issue that you have to handle every single day where you pay the bill on the monthly basis and it's unlimited liability there, that 150K sounds pretty cheap now. It's actually really cheap. So cheap is a relative term, you know, but I think it's when in that scenario, Rob, if the guy or gal is risk averse, they're going to want to push that risk as far away from them as they can. Now, if they're like, damn the torpedoes and I'm ready and risk on, baby, then it doesn't matter if the price is $10,000, they're still not going to buy it. They think it's all a ripoff. So, you know, it just depends.
I think I'm going to have a new t-shirt next week. We'll just have a fist and go risk on, baby. That's going to be my next purchase. One of the things that you said, I remember hearing this and it kind of popped my eye up when I was zoned and glazed over, because this isn't something I do for I don't have TCPA liability in my business. But at the same point, you said that some of these companies, especially deep buried in that big stack that you're carrying around, there's something in there that determines, in the case of suits, who will represent and who will be the subject matter expert. And ultimately that boils down to, did we settle? Did we just cop it that we lost and we end up paying, and whatever's covered under the policy's covered and whatever's left over is not? That's a big deal, right? Because some of these, especially the larger policies, some of these policies don't have that provision of who's going to actually represent the defendant in these cases in doing it right, and the subject matter expert and trying to plead to the court, this is why this is a compliant call, or this is why we did everything to protect the consumer. You told the audience that a lot of these insurance companies, they'll pull in whatever they have counsel-wise to defend the case, and ultimately, if there's not a subject matter expert, it could end up working against you as it relates to the outcome, right?
Yeah, I would say
Or
that's
am I wrong?
No, absolutely, Rob. I mean, I think that, you know, attorneys are in the business of, you know, making arguments, and they make arguments on both sides. And then when you have a contract in the form of an insurance policy that has language that will trigger, that's a defined term, trigger a policy to pay or not, all of this becomes very important. So once the claim is established, yes, we are covered, we are assigning counsel. Now that's an important part of the process, where I kind of miraculously arrive on the scene and say, hey, who do you guys like here? Or really, I'd like to do it when we buy the insurance. Frankly, I don't want to do it, you know, as we're clearing up the car crash. I want to do it before. And if your premium spend justifies it, you know, we have in the past gotten designated counsel endorsements, but we've also done it at the scene of the crime, where, you know, the guy or gal is like, hey, I really like this attorney, I want to use them, and the carrier says, hey, our rate is X and your attorney's rate is Y, and we're only going to pay our rate because it's, you know, that's just that's our deal. And either the attorney accepts that and they run with it on a reduced fee, or I've seen in other cases where the insurance company pays their rate and then the client pays the delta between his attorney's rate. So it's almost like a co-insurance situation, like a co-pay on a health plan. I've seen that, and clients are happy with that, and it works out. I mean, I think it's important also to understand that when you buy, and this goes with any insurance policy, your home, your car, your business, you personally, Rob, you buy a car insurance policy and you buy an umbrella policy, let's say, and your umbrella is $3 million. On your personal balance sheet, you have this imaginary $3 million laying around to just deploy capital against anybody that wants to sue you for, you know, you run down a mountain and hit somebody on the skis, you know, somebody trips and falls in your lawn, you know, and then conversely, if you don't buy that policy, you have an unlimited amount of liability that sits there on your personal balance sheet. And this is all imaginary, and but I think
I was about to call my CPA and say, look, we're in better
Jimmy,
financial
put that asset on
situations
there. Yeah. But I think it's an important concept to understand, because I really believe, you know, my business card says I'm an insurance agent. I really think I'm more of a financial, financial guy, because I'm moving risk around in your business, your home, your cars, your family, and we're mitigating risk. We're guys like, hey, that is 1 in a million, Otto. I'm not going to pay $500 for that extra coverage. Okay, no problem, no problem. But at least asked, offered, not accepted. Thank you. Move on. So I think that's the chatter that when the client and I engage and we develop a relationship, then that's when like the sword and shield are down. I'm no longer like trying to get all the premium I can out of you. It's like, dude, I'm on your side, man. I work for you. So let's have some chatter. Hey, are you nervous about this happening in your business? Yeah, that keeps me up at night. Okay, let's take that risk off your plate and put it with a risk-bearing insurance company. Or what about this over here? Not worried about that. Never happened in a million years. Well, have you ever considered that? Yes, I have. We contractually worked that out. I'm not worried about it. Okay, don't have to worry about it. Thank you. Goodbye. So that's the kind of conversation that you can't have with your insurance company, because if you did, they just say, they pack up their bags. We want nothing to do with you, because you're too risky. You said something. Brokers are what make the world work. I mean, that's everything.
I will quote that. Thank
brokers.
you.
Yeah.
Look, just for the audience, we've got about 7-8 more minutes left on this, and I want to make sure if you have questions, please ask them in the questions panel. But now that we've set the stage, we've gone through, we've assessed the risk, we know there's risk, we know that there are companies that have certain levels of aversion to that risk. We set the stage about like the things that happen in the court, the things that can and can't happen in the court. What could we do? Like if I'm a company, I'm listening to this right now, I'm in love with my broker. I like my broker. That's a relationship I've had for 15 years. Don't Otto, look, I like what you're saying, but don't pull me away from my broker. What can I do here to help me understand, one, am I covered? Because I think that a lot of people, especially when we ask that question from the stage, we've got several people who raised their hand like, yeah, I think I'm are we covered? I mean, that's what we see from the stage. Then when we ask somebody who has so gallantly raised their hand, hey, where in your policy is it covered and what did you get? Most of those people go, oh, God, sorry, I was scratching my face. But then you get the other people who just really absolutely don't want to be called on. What can I do? I've got a broker I like, or maybe I don't like that broker. How do I now start that journey? Because a lot of people are getting this for the first time. They're getting exposed to it. It's a bit scary. I want to de-scare some of this for them.
I think it's important to, if you're buying insurance now, to just gather up that document and find your local expert, find a broker that you trust, and say, hey, these are my problems in my business, and this is the issue, and here's my stack of policies from Hartford Travelers, Lloyd's of London, AIG, whoever, and let's go through them and send them to me, send them to somebody, and say, hey, I think there's an exclusion in here, but I'm not sure, and I'd fall asleep reading this, so can you just look at it? Yeah, there's an exclusion right here. It's Control F. You just, you can find it pretty quick, the documents. So those are pretty simple things. And then, if you've diagnosed the problem and said, hey, I thought I had coverage, I now found out I don't. What do I do now? Now you just got to go find a broker or somebody that can talk the language to help fly your flag. And call me. I'm consultative, man. This stuff sells itself. I'm not here trying to sell everything that walks through the door. I like building relationships. I like talking with people. Things change over time. I have a great story about somebody that called me and said, hey, my agent is my fraternity brother. He's unshoppable. Can you just look at my policies, get on the phone with him and talk to him? I talked to him for 30 minutes. He thought I was adversarial, and I was like, dude, I'm not trying to sell anything here. I'm just trying to point out that your policy has gaps, and you need to understand what those gaps are. Now, in that particular case, I was about to say sorority, the fraternity brother has no idea what that guy really does. He has no idea what the guy does. He's like, oh, you know, he's a white knight. And I'm like, he's a white knight. He's a wolf wrapped in sheep's clothing, man. That guy intentionally makes phone calls, barraging, the grandmothers and grandfathers of America, trolling for Medicare, uh, you know, buyer beware. And he's like, oh, we're
I'm
covered.
glad
We're
that you
covered.
pulled that up for dramatic effect.
All right.
I
We're
appreciate
covered. We're good. We're covered.
All right. So here's the thing. What I'm hearing from you is basically if you're in an existing policy or you're not in an existing policy, you think you have coverage, you don't know if you have coverage, or you know you don't have coverage. It's as easy as picking up the phone, giving you a shout, writing you an email, whatever it is, and saying, Otto, I need a little help, right? Is that what you're saying?
Yeah, the biggest problem in my business is everybody in this world, millennial, they think that, hey, I can just send an email. I don't have to talk to anybody. And, you can miraculously quote me on this and go forth and replicate. Would love nothing more. Okay, calling all people in this business, come to me. I will pay you an unlimited sum to build that for me. But that doesn't exist. So I need a 10-minute conversation, 10 minutes of your time out of your day. Just mark it off. Give me 10 minutes. Send me a copy of your policies. I don't need to sell you a thing. I just want to talk to you about it. And if you like the way I talk, the way I do it, great. I'll give you a quote. If not, take all the information I just gave you, go to your broker and have him figure it out. No problem. But I need 10 minutes on the phone. And somebody who can build me a portal to do it without a phone, I have an unlimited sum to give you because I get 100 emails a month. Hey, hey, I need 10 minutes on the phone. Never hear from him again because they think, oh, that's too much time and it's going to be forever. I don't know if you're selling, Medicare. I don't know what you're doing. Are you sending text messages? Are you aggregating personal identifiable data in your grandmother's garage? I have no idea what you do, man. You could be in Cyprus. You could have a blue mohawk in Cyprus. I don't know. You might be working for Putin. I have no idea.
All right, I'm getting a new shirt. I'm getting a blue mohawk, and I'm probably not going to do the last thing. How do I get a hold of you? What is the best way to get a hold of you?
Yeah, text, email, WhatsApp, phone, whatever. Rob's got my stuff.
Not WhatsApp. Are you on LinkedIn?
Yes.
You're on LinkedIn, Otto Forrester, if you need that. By the way, this will be edited down and available in the next 24, 48 hours. I'll do my best to get that up there so that you can repeat this and share it with everybody. You're on LinkedIn, you're in a NEA group. What's the URL that I can come to your website and find you?
NEAINS.com. You just dolled up a night. Thank you, Mike. Well done on that, Mike. You dog, you just
NEAINS.com.
Yeah.
Great. Man, Otto, thank you. This has been enjoyable. This is an area that I think a lot of people really want more information for. So I really appreciate you taking the time out today. This has been informative for everybody, and I can't wait to get this edited and back up for people to see. Thank you again. Everybody, I know that this is my selling point for the council. Our memberships, our lowest one now, with almost every benefit right now during COVID, is available for $500 a year or $42 a month. That's a no-brainer. Sign up right on our homepage. In the events, under the resource tab, there's an events tab, and that will give you the updates for anything that I post, both upcoming webinars and both the ones that we edit and post up there. And so I really appreciate that. This has been fun. Hope everybody had enjoyed this and got something out of it. And Otto, thank you very much again. Please go out there and take care of your beekeeping hive, and we'll see you next week.
Thank you, guys. Pleasure.